European Union leaders have concluded their latest summit with a few concrete steps to fix the continent's festering financial crisis. The German Chancellor urged Greece to stay in the euro, but called for the country to stay the course on austerity and reforms. To talk more on the Eurozone crisis and what this means for South Africa, we're joined in studio by Konrad Reuss, Managing Director, Standard & Poor's for South and Sub-Saharan Africa. Thank you very much for your time.
Good evening.
I ask you on a regular basis, when this news flow gets very negative, is it the end of the world?
I wouldn't call it the end of the world, wouldn't call it the end of the world yet.
Yes, oh my goodness me. Maybe we should just give up completely.
I think really we are back to almost a situation like in 2007, 2008. If Brexit, the Greek exit, really were to happen, I think we would be really experiencing a lot of turmoil in the markets. We would see not only a slow bank run, we would see probably bank runs in Italy, in Spain. The run on Northern Rock in 2008 would probably have been a piece of cake in comparison.
This does not sound good. Konrad, if we're in for this tonight. We don't want to hear this, do we?
But if you're not the first person that's saying this, and yet it seems quite obvious. Looking back at 2008 and the Lehman crisis, once it came, everybody said, who's next? And you've painted a picture of exactly what would happen. Why doesn't anybody listen?
I think at the moment...
why doesn't anybody wake up and say, hold on a sec, we're facing this crisis, yet we cannot get a decision out of the European leaders?
But there is in a way, there's a systematic approach here. We've been stumbling from one summit to another, and the situation really hasn't improved. Solutions were put on the table. They were too little too late. So we stumbled on to the next summit. In the meantime, obviously, public sentiment turned completely around in the countries like Greece. And it was clear at some point the austerity medication they had to take would be too painful. And now we are seeing that sort of pushing back on the public front. We are seeing it in politics. What are the next Greek elections are going to give us? Certainly not the kind of government that would take charge, would fully back the austerity measures and soldier on and keep Greece in the Union.
And that's the key here, because they can keep bailing them out, but if they don't adhere to the austerity measures, they're going to have to kick them out the Eurozone. You can't keep rewarding somebody for behaving badly, because effectively that's what they will be doing.
Absolutely. Moral hazard, I think, was mentioned just a moment ago in this discussion round, and that's exactly what would happen. And moral hazard would spread. The markets would look at Italy, would look at Spain again, and the question would come up, how far can they go? How far can we push them before they fall them? And again, you would see that moral hazard issue coming back in. And I think if contagion were to spread because of Greece, deeply into Italy and Spain, not even really the Germans and the French together really can straighten it out. Then I think we would be talking about really the breaking up of the Eurozone as such, and not just a Brexit.
You want to go with this?
Yeah, what would an orderly Brexit look like?
Is there something like an orderly Brexit? I guess that's...
I don't think there is an orderly Brexit.
That's the big question. It certainly would, even under a broadly speaking orderly disguise, it would probably mean a run on the banks. Already we have seen like this slow run happening or unfolding for quite some time. That would accelerate. We would see government defaults. The government default in Greece. We would probably see corporate defaults. And do you call that orderly or disorderly? That's the question out there. I guess disorderly, I think most would probably kind of see that in the context that contagion is rapidly spreading to the countries on the periphery, Portugal, Spain, Italy, Ireland possibly.
Can I ask you a personal question? Being German, how do you feel about this? Take away the Standard & Poor's, how do you feel about this situation?
Personally, very sad. I was always very much behind the European Union project, behind the euro. And in some ways, the way it's unfolding now, the way national interest has come back into the game and is kind of really sort of the main obstacle to an all-out solution. And I guess the all-out solution at the end of the day is fiscal union, more political union, but nobody, not even the Germans at the moment, have any kind of appetite for going into that direction. So all in all, for me, it's just very sad, because ultimately also Brexit or a wider unraveling of the European Union, it just means pain for a lot of people.
Markets are holding up pretty well. They haven't collapsed. So they're saying it's going to be solved, or a solution will be
They're
found.
praying it's going to be solved.
Well, you know, otherwise we would have seen certainly bond yields coming down. I don't say further, but a lot more money flowing out of equity markets into the bond markets, into fixed interest markets, and yet they're holding. You know, they're not really falling in a heap. So there is a view that, I mean, the equity investors believe that this is going to be solved.
But equity investors have to believe.
I don't think they have to. You know, they can go short. They can go the other way. So there seems to still be, in a view that someone on the white horse, the cavalry, will come and save the day. Where do you stand?
Well, I guess that white horse and that man on that white horse would be the ECB and Mario Draghi. I think what we have, however, are kind of moments of panic. They come, they ebb and flow. There's no outright panic, there's no outright run on the banks. But sometimes I get the feeling, certainly the panic in the markets, when you see how yields blow out and all that, there are elements of panic.
And look at what happened yesterday. I mean, those European markets came under significant pressure yesterday. The dollar rand went to 8.44. Clearly risk off. We spoke today about potentially this dead cat bounce. Again, don't like the term. But, you know, people just saying, I don't want to believe the worst here.
There is tremendous volatility, obviously, in the market. And when I look at our ratings, I looked at all the sovereign ratings we have at the moment, and I noticed that actually 1 out of 3 ratings globally has a negative outlook at the moment, which is a spectacularly high percentage of negative outlooks on sovereign ratings. In the first quarter of 2012, we only had downgrades. There were no upgrades. Usually you have a certain ratio of upgrades, downgrades. First quarter 2012, only downgrades. Fourth quarter 2011, downgrades outweighed upgrades by more than double. So credit quality is diminishing. That's quite clear, and we haven't seen the end yet. I'm afraid.
But the worst case scenario, if we do get the scene that you've painted with Greece exiting, etc., will lead, no doubt, to a huge slump, a huge global downturn. In other words, everyone will go into panic. China's going to say, well, where's our market? America's going to say, what does this lead to? I mean, it might bring about that recession that we feared, and I'm talking, or even a depression that we feared in 2008.
I think in many ways the recession would be the logical consequence, because obviously consumer demand or consumer confidence would plummet, business confidence would do probably the same, and given how interconnected we all are, global demand would just take a very bad and big hit. The question then is, however, how long a recession would it be? And that sort of goes back to, if you have a Brexit, how strong can they make the firewalls to avoid that the fire is spreading all over? And if politicians, policymakers can create firewalls that will kind of contain the Greek dilemma and contagion, then the recession could be reasonably short in the end of the day. But if that's not going to happen, and you really have a wildfire racing through the south of Europe, then I think we're in for a pretty long recession.
Oui.